Hey everyone, welcome back to my channel, Investment Research. My name is Simo, I'm an equity research analyst. And today I'm going to share my personal deep dive on Palantir Technologies, ticker PLTR. This is not just a quick overview. I've been following Palantir for years, and I want to walk you through the numbers, the latest results, the growth story, the risks, and also give you my forecast as to where this stock might be headed. The key question I'm asking is, can Palantir sustain its momentum in the AI boom, and will it justify its premium valuation over the next 5 to 10 years? So, let's get started. Palantir was founded in 2003, and what makes it different is its roots in national security. The company's software isn't just another SaaS product, it's deeply embedded in mission-critical operations. The two main platforms are Gotham, which is heavily used in defense and intelligence, and Foundry, which is tailored for enterprise and commercial use. There's also Apollo, which is their deployment system, basically the backbone that allows Palantir to deliver updates continuously across different environments, whether on-prem, in the cloud, or even in classified government networks. Now, one of the reasons I believe Palantir is so sticky is its model of forward-deployed engineers. These engineers go directly into client organizations and essentially customize and integrate Palantir's platforms to the client's workflows. That makes it hard for customers to rip Palantir out once it's in place. If we turn to 2025, this has been a transformational year for Palantir. In the second quarter of 2025, the company crossed a major milestone, $1 billion in quarterly revenue. That's up 48% year over year, a growth rate that's exceptional for a company of this size. Breaking this down further, US commercial revenue increased 93% year over year. This shows that Palantir is no longer just a government contractor. It's becoming a commercial powerhouse. US government revenue rose 53% year over year, which confirms that their bread and butter government contracts remain very strong. Management raised their full year guidance, now expecting around 45% revenue growth for 2025 compared to the low 30% range just a year ago. And strategically, there have been big wins. Palantir signed a partnership with Boeing Defense, integrating Foundry into Boeing's defense operations. That's validation from one of the biggest defense contractors in the world. They're also competing in the so-called Golden Dome project, which is a missile defense initiative. If Palantir secures even part of that contract, the upside for government revenue could be massive, potentially billions of dollars over the coming decade. Now let's get into the financials, because this is where things get really interesting. For Q2 2025, revenue came in just over $1 billion, as I mentioned, compared to $680 million in Q2 2024. Earnings per share were $0.13, beating analyst expectations of around $0.11. Adjusted operating income was guided at $493 to $497 million, showing very strong operating leverage. For the full year 2024, revenue was about $2.87 billion, up 20% from 2023. Net income was $462 million, marking a clear turnaround from years of losses. On the balance sheet, Palantir has over $3 billion in cash and no major debt issues. That financial flexibility is important because it means they can invest heavily in R&D, pursue acquisitions, or scale their sales force without worrying about liquidity. And one key ratio I always check, free cash flow margin. Palantir's free cash flow in 2024 was about $730 million, giving it a free cash flow margin of roughly 25%. That's already approaching best-in-class software margins. So what this tells me is that Palantir has moved from being a promising story to being a profitable cash-generating AI leader. Now, if we zoom out, the addressable market here is enormous. The government analytics and defense AI market is worth tens of billions per year globally. With rising geopolitical tensions, governments are investing more in AI for defense, intelligence, and logistics. Palantir is one of the very few companies already embedded in these systems. On the commercial side, the opportunity is even bigger. The global enterprise data analytics and AI market is expected to exceed $400 billion by 2030. Every company is drowning in data, and Palantir's Foundry is designed to solve exactly that. And here's why I think Palantir's opportunity is special. It's not trying to be a consumer AI company like OpenAI or Anthropic. Instead, it's focused on mission-critical, enterprise-grade AI. That's the kind of market where contracts last year's switching costs are huge and margins expand over time. Now, valuation is where a lot of investors get nervous. At today's price levels, Palantir trades at a forward PE of about 52x based on 2025 consensus EPS. It also trades at around 18x forward sales, which is much higher than traditional software companies, which average around 8x to 10x. So yes, the stock is expensive, but, and this is key, the growth profile is also much stronger. Management is forecasting 45% top-line growth in 2025, with operating margins expanding into the high 20s. If Palantir can maintain even 25% growth annually for the next 5 years, the current valuation might actually prove justified. In my own forecast, I model 3 scenarios. Bull case, revenue grows at 30% annually through 2030, operating margins expand to 35%, and EPS grows 40% annually. In this case, I see the stock potentially tripling from here over the next 5 to 7 years. Base case. Revenue growth slows to 20 to 25% annually, margins expand moderately, and EPS growth is around 25%. This implies mid-teens annual returns, which is still attractive. Bear case. Growth falls below 15% due to weaker government spending or stalled commercial adoption. In this case, the valuation multiple compresses and the stock could lose 40-50% from current levels. So, my personal view is that Palantir deserves a premium multiple, but I also recognize that it's priced for perfection. Let's be clear on the risks because they're real. Valuation risk. If Palantir misses just one quarter, the stock could drop 20% overnight because expectations are sky high. Government dependence. About half of revenue still comes from government contracts. Any shift in defense budgets or politics could hurt results. Competition. Microsoft, Google, AWS, and other AI players are building their own platforms. Palantir must keep innovating. Execution risk. Expanding globally requires navigating regulations and scaling operations effectively. Insider selling. Co-founder Stephen Cohen and others have sold shares under planned sales programs, which sometimes pressures the stock. Now let's talk about Palantir from a trading perspective. The stock is currently trading near its prior all-time highs. Technically, resistance is around $190 per share, and a clean breakout above that could send the stock much higher. On the downside, support levels sit around $160. Institutional ownership has been increasing, but it's still relatively low compared to mega cap tech stocks. That means there's still room for more big money inflows. For short-term traders, Palantir is a high volatility momentum stock. Earnings announcements can move it 10 to 15% in a single day. For long-term investors like myself, I see Palantir as a core growth allocation, but I would size it carefully, maybe 3 to 5% of a portfolio because of the volatility and valuation risks. So where do I stand? I believe Palantir has earned its credibility. It's gone from being dismissed as just a government contractor to proving it can scale commercially, deliver strong revenue growth, and actually generate real profits. In my view, Palantir is one of the most compelling plays on the intersection of AI, defense, and enterprise analytics. The company is profitable, growing fast, and sitting on a multi-billion-dollar opportunity. That said, the stock is not cheap. If you're looking for a bargain, this isn't it. But if you believe, like I do, that Palantir will continue to dominate mission-critical AI, then the premium price today might still look reasonable 5 to 10 years down the line. For me, Palantir is a long-term hold. I think it belongs in a growth portfolio, but with the awareness that volatility will be high and patience is required. Thanks for watching my research deep dive on Palantir Technologies. Don't forget to subscribe if you want more equity research breakdowns, and let me know in the comments if you're bullish, bearish, or neutral on Palantir. See you in the next video.